unless you're a day trader or some type of active investor, most of us may want a portfolio that requires very minimum overwatch. So that means you can set up automatic investments into a portfolio and have all that money divided amongst every stock and ETF you have evenly, and you rarely have to worry about going online to see how that portfolio and those stocks are doing. And in order to have that, you need to have a portfolio of stocks and exchange traded funds where each portfolio gives you little to no concern in regards to its overall stock growth and its dividend growth and payout. Now, my portfolio has a little over 30 different positions within it, and honestly, at times it gets very difficult to keep up with. And I'll be even more honest with you guys, I'm not even 100% sure if every position I have is something that is costing me money, whether it's lost money overall or it's cut its dividend payout. That's something I'm definitely looking into right now. But I went through my portfolio and I picked 5 different positions that if I was forced to, I would sell the rest and continuously invest in those without having to really pay attention to them forever. Now, my mindset for the 5 different positions that I ultimately selected was based on 5 different categories of a portfolio that were really important to me. The first one was automatic diversification, then you have high dividend yield, then a long-term dividend growth stock, a long-term capital growth stock, and then a hybrid, a combination of capital and dividend growth. So let's start with the automatic diversification position, which is one of, if not my favorite ETF, VTI, or the Vanguard Total Stock Market ETF. As an ETF, VTI tracks what you could probably assume it tracks based off its title, which is the entire stock market. More specifically, it tracks over 3,800 different positions within the US stock market, ranging from small cap to mid cap to even large cap. VTI is also a dividend paying ETF, which is really cool, but it's honestly not too much to brag about. It has a dividend yield of a little over 1% currently, so it pays out a little over $2.60 per share per year. On top of that, it also does have a history of growing its dividend, but only by 0.08% over the past 5 years, so not really much at all. However, what is something to brag about is its overall share price history. Over the past 5 years, it has a growth history of 73.72%, and over the past 10 years, its share price has grown over 150%. And that definitely has a lot to do with the top positions that this Vanguard ETF invests into, starting with technology being its biggest sector at over 29%, holding some stocks such as Apple, Microsoft, and Nvidia. That's the biggest benefit of all ETFs. You have that automatic diversification into multiple stocks and sometimes even multiple sectors, especially with this ETF, and you have the added bonus of a quarterly dividend. When it comes to high yield, I had to go with Realty Income. Didn't really take much of a thought at all. Realty Income is a real estate investment trust that's in charge of single tenant properties that are owned by what I feel to believe are mostly essential based companies, and those companies range from Dollar Tree, Lowe's, Dollar General, Walgreens, 7-Eleven, FedEx, Walmart, Sam's Club, etc. Now, for the long-term growth of the share price for this company, it's not really the greatest. Over the past 10 years, it has grown almost 25% in share price, but over the past 5 years, it's dropped by 22%. I'm sure that has a lot to do with the major hit that it took during the pandemic. However, you may or may not know that Realty Income is nicknamed the monthly dividend company, and it's nicknamed that for a pretty obvious reason. It does pay a dividend every single month, which isn't really common for dividend paying stocks. And aside from the fact that it has a dividend yield of over 5%, which is really high, which means it pays the shareholders a little under $4 a year, it does have a pretty impressive dividend growth rate of 3.66% within the past 5 years. And that's pretty significant in my opinion, considering that REITs have to contribute 90% of their earnings back to their shareholders in order to maintain the name of being a REIT. So having the ability to continuously pay that dividend out, let alone increase it by almost 4% in the past 5 years, is actually pretty cool. And getting into increasing their dividend payout, and the biggest reason why they're called the monthly dividend company is the fact that they've been able to not only pay a monthly dividend to shareholders, but increase that monthly dividend for the past 31 years, which is wild. Despite its questionable long-term growth history, Realty Income still has a dividend that is supported by the over 13,000 different tenants that they have, most of them being based off essential-based companies, which makes it more obvious as to why they can continuously pay Realty Income and why Realty Income can continuously pay us dividends as shareholders. So for the dividend growth category, the company I picked was Altria. Now, Altria is the leading or one of the leading leaders in tobacco within the US, selling different products like the Marlboro Marlboro brand cigarettes. Now, I will say this before we continue on. I do invest into Altria. I have a little over 2 shares. I'm not necessarily supporting what they do. I'm not someone that smokes. However, I'm not someone that judges others that smoke. I just choose not to do it because I think it's a nasty habit, and it definitely can have a lot of health consequences. But if that's something you do, that's something you do. And I'm honestly admitting that it is something I'm investing into, and primarily that's because of its high dividend yield. So currently Altria has a dividend yield of almost 10%, and its 5-year growth rate of that dividend is over 5%. So 1% per year, not too bad. But what's really cool and why I was really tempted to pick this position to represent dividend growth is the fact that they've been able to consistently pay and increase that dividend payout to its shareholders for over 54 years, making it one of, I believe, 55 different companies within the entire stock market to be categorized as a dividend king, which is basically a dividend paying stock, or I believe exchange traded fund, that has been able to consistently pay out and increase their dividend payout to their shareholders for at least 50 years. Now, their growth rate, that's a little bit in question. Their 10-year growth rate is at about 13%, almost 14%, and their 5-year growth rate is a lot less. Over the past 5 years, they have lost almost 18%. I'll get into that in a second on why I think that is, or what's pretty obvious. As far as the dividend payout goes, it's really cool that this is one of the few different stocks out there that has paid and increased their dividend payout for over 50 years. That really built a lot of trust within shareholders to be able to invest money into it and not worry about not having their dividend payout cut, because that's one of the biggest concerns that you would want to have. So this would be a great company to have in a portfolio where you can set and forget. However, there is currently a steady decline of use of cigarettes, which in my personal opinion, on a health aspect, is a really good thing, but for this company it may not be the greatest, and they've been trying to offset that by increasing prices of cigarettes, but it's still showing an ultimate decline, which is probably a reason why for the past 5 years their share price has decreased. But I do believe this will be a company that will overall pull through, and they'll probably redefine themselves to be more focused on smokeless tobacco and even cannabis. So for the long-term capital growth position, NVIDIA, needless to say, this is one of, if not the leading provider in GPUs or graphics processing units that are used in things such as automobiles, video games, PCs, and data centers. They currently have been on the news significantly. They've been dubbed as, I believe, the most important tech stock, or let alone the most important stock within the stock market, or the most important company within the past year. They have major roles with other tech companies such as Microsoft and Meta by supplying their GPUs into their data centers so they can accomplish things such as the creation and continuation of ChatGPT. So that really explains the ridiculous long-term growth that they've had. Over the past 5 years, they have grown their share price by over 1,700%. And over 10 years, 15,000%. Like 15,000%. That's stupid. Now, on the dividend side, that's where this company gets really humble. This isn't really a company that should be known to have a dividend. It's just kind of one of those, oh yeah, I forgot they have a dividend. Their dividend yield is 0.02%, which means for every share you buy, you get paid 16 cents per year, and their share price is like $700 right now, so you do the math. And they also have a growth rate of 0.96%. Now, this is higher than VTI, which is pretty funny, but still 16 cents per year. So not gonna really do much. But overall, I would definitely invest in this position because technology right now is probably the most volatile sector within the stock market, which could have a lot of benefits and obviously a lot of consequences. But over the past couple of years of me investing into it, it's only brought me great returns. I think it's provided me the most returns out of all the positions I have within my entire portfolio. And you can see based off its long-term history, it's done a really good job. And for the happy medium stock, I chose McDonald's. So McDonald's, as we know, is one of the most popular fast food chains out there, but there's actually something else that probably provides it just as much money, if not more, but I'll get into that in a second. As far as its dividend yield, it has a 2.29% dividend yield, meaning it pays a little over $6.60 per share per year, and it has a 5-year growth rate of 8%, which not only supports its 22 years of consistent dividend increase, but it also happens to have the highest 5-year dividend growth rate out of all the positions I've named so far. So that means the dividend is great. Then you have the overall growth. It has a 5-year return of over 60% and a 10-year return of over 200%. So that also means the long-term growth is great. You put that together, that gives you your happy medium. And the reason why I also would choose this position to invest into the long term is the other way they make money. McDonald's is not only known as a fast food company, but I believe McDonald's Corporation wants them to be more known as a real estate company. What I didn't know is that 85% of all the McDonald's that are built in the entire world are franchise owned, meaning that someone has invested and actually owns that building, but McDonald's is the landlord of that building. And how that benefits McDonald's is that not only do they get paid the actual rent for the building from the franchise owner, but they get a small cut of the money that that franchise makes from the food that they sell. That whole concept as far as a revenue idea is really amazing, and that really makes me want to continue to invest into a company like that. As I said before, having long-term success in the stock market doesn't always mean you have to have a portfolio that's filled with multiple stocks, like over 30 like I currently have. Plus, for people like me, you may have trouble with keeping up with all those positions, not realizing that you may have a company at the bottom of your list that is losing you a lot of money, or you may have another company that has either cut its dividend payout or has just got rid of it altogether. But in the meantime, I have these 30 positions, and I'll definitely continue to look over to see if there are any positions that are not helping me accomplish the goal I want to. But last month, it actually did a really good job for me, and I talk about that in this video. There are actually 2 really cool milestones, dividend and overall growth, that I hit last month. So make sure you check out that video so you can hear more about that. And that's only investing $30 a week. But I appreciate you guys watching this video. Until next time, as always, take care.